Trading spot VIX is a holy grail of the derivatives world, and with the launch of AccuShares spot VIX ETFs, that could be a possibility for investors. Jack, congratulations on the launch, but let's talk about volatility as an asset class, because that's a conversation that's relatively new to the retail market.
It is, and I think the view that most people take is they look at it as a separate asset class because it's typically negatively correlated with the holdings that investors typically have, like broad-based equity indices. I think, though, volatility as an asset class maybe is a bit of a misnomer, and it's really, we think of it more as a tactical tool. Right. That is, it's a complement to broad-based equity investing, as opposed to its own asset class outright.
Let's talk about the new AccuShares products that makes us bet on the VIX up or down. There's a lot of flaws in traditional volatility-related products like the VXX, UVXY, because you have that futures roll in the contango and so forth, and all of the cost and errors in pricing there is with those products. Will that be the same with the new AccuShares products? How are these better than traditional futures and volatility-based products?
Right. The structure is different and the mechanics are different. So our funds are linked directly to the spot CBOE VIX. The share values will respond directly to the cash VIX index and not a futures portfolio. And what we've done in an architecture, in a firm architecture, is we've taken together the buyers of VIX, so in our case the VXUP shareholders, and the sellers of VIX, the VXDN shareholders, and put them together in one fund.
Right, so it's actually matched buyers and sellers, and it works a little bit different than the VXX and UVXY because there's actually an expiration date on this, if you will.
That is correct. Now, our shares are perpetual. Another, an ETP, an exchange-traded product, which uses futures, is it, for better or worse, does drag the limitations of the futures contracts into the product, and then the product may introduce other limitations. We don't have futures, so we don't have the limitations of what futures bring in terms of some of the roll complications.
So will this mirror the VIX exactly? Because taking a look at it today, the VXUP, which is the directional bet to the upside, is actually down a little bit while the VIX is up. Is that just because of the timing cycles that it's on or how it's constructed? How can investors use these new products to make either a hedging or speculative directional bet? Right.
That is in fact the goal, that investors will be able to take a real view on the cash VIX. And again, if the view is that the cash VIX is going to be increasing in the near term, they would buy the VXUP. Otherwise, they would buy the VXDN. The product started trading today. Volumes are still pretty light. We expect you and everybody else to be following this very closely in the very near term. So I think we've had a constructive launch, but I think there's some performance enhancement to go.
Okay, thanks very much, Jack. For TheStreet in New York, I'm Jill Malandrino.